Why speed matters more than interest rates in business financing. When business owners think about financing, interest rates often steal the spotlight. While rates are important, they are not always the most critical factor. In today's fast-moving business environment, speed of funding can matter far more than securing the lowest possible rate. In 2025, the businesses that win aren't always the ones with the cheapest capital. They're the ones that get access to capital when it matters most. Business opportunities are time-sensitive. Whether it's acquiring inventory at a discount, signing a lease, closing a real estate deal, or launching a new marketing campaign, waiting weeks or months for funding can mean losing the deal entirely. So, here's the thing. A lower interest rate is, well, pretty much meaningless if the transaction window closes, a competitor moves faster, or, the opportunity just no longer exists. Speed, honestly, is what ensures momentum. And momentum, in turn, is what really drives growth. Traditional financing, more often than not, involves these lengthy approval processes, multiple reviews, and, some pretty rigid underwriting standards. And during this delay, businesses often experience all sorts of setbacks. Increased holding costs, lost revenue opportunities, missed seasonal demand, and weakened negotiating power. These are just some of the hidden costs, And honestly, these hidden costs can actually exceed the difference between a low-rate loan and a faster funding option. Quick access to funding empowers businesses to act decisively. So instead of reacting to cash shortages, business owners can operate from a position of strength. Fast capital can be used to lock in favorable supplier contracts, execute acquisitions before competitors, stabilize cash flow during expansion, capture off-market opportunities, and of course, refinance later on better terms. Experienced entrepreneurs understand that speed creates leverage, and leverage creates profit. Many successful borrowers focus less on perfect terms and more on effective execution. Financing that closes quickly can always be optimized later through refinancing or restructuring. The real risk isn't paying slightly more interest, it's missing the opportunity altogether. Smart businesses view fast financing as a strategic bridge, not a permanent cost. So, 2025 marks the era of execution. Markets are just more competitive, data-driven, and opportunity-focused than ever before. Businesses that hesitate, honestly, they fall behind. While those with the right funding, well, they move forward confidently. Capital availability isn't just about affordability anymore. It's really about access, timing, and flexibility. Just a few final thoughts here. Interest rates definitely matter, but, timing matters even more. In 2025, the most successful businesses will be the ones that, first, prioritize execution over hesitation, really understand the time value of money, use fast capital strategically, and optimize their financing after the opportunity is secured. Because honestly, in business, the best deal is often the one you didn't miss.